Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks that come in with a strong buy consensus from Wall Street. We'll take a look at these companies, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. Just before we get into that, I want to apologize for my absence yesterday. As you can probably tell from my voice, I am dealing with a sinus infection that really just took me out yesterday, but didn't want to leave you guys hanging another day, so we're back here today. I apologize if I sound a little extra nasally. Just a reminder right now for this week, TipRanks is having a 30% off sale. So if you've been wanting to unlock some fantastic investment research tools, now is a great time to do so. You can head on over to the TipRanks website to take advantage of this sale now. Now let's get right into our two strong buy stocks. First up today is a company called HASI, or Hannon Armstrong Sustainable Infrastructure Capital. Their stock trades under the ticker HASI, currently priced at $27.33 per share. Over the past 1 year, they have gained over 10% and have climbed 29% in the last 6 months, but are down a couple percent in the last 3. This is an investment company that specializes in taking a climate-positive stance in capital investments. They have $12 billion in assets on the books, and many of these companies are ones that are taking steps towards a cleaner future. The company requires all of its prospective investments be either neutral or negative on incremental carbon emissions, or barring that they offer some other tangible benefit to long-term climate future. They've been standing on this principle for over 40 years and have built an impressive portfolio of assets that fall into 3 broad categories. The largest is behind the meter, dealing with energy efficiency and distributed solar storage. The next largest is grid connected, which is directed assets in wind and solar power generation and power storage. And their smallest portfolio component is fuels, transport, and nature, a set of assets involved in renewable natural gas, fleet decarbonization, and ecological restoration. The HASI stock does pay a quarterly dividend. At 41 cents per share, they currently have a dividend yield of 5.89%, and their next ex-dividend date is coming up in a couple of weeks on April 4th. They shared their fourth quarter and full year results back on February 14th, and while they did fall short of analyst expectations, the company did see some impressive year-over-year growth. For their fourth quarter, they reported revenue of $86.58 million, and that did grow 48.5% year-over-year, but earnings per share of 53 cents did fall 7 cents short of analyst expectations. The company did see their portfolio grow 44% to $6.2 billion for the entire year. Following that quarterly earnings report, we did hear from a 5-star analyst at Oppenheimer. They said, "We view HASI as a sustainable finance play on the growth of energy efficiency and renewables with a strong management team, a differentiated investment strategy, and increasing deal pipeline, and a track record of earnings and dividend growth. We believe HASI's business model will enable the company to navigate interest rate risk and identify high-yield niche investments." The stock does get a strong buy rating overall based on 9 current analyst ratings with 7 buys and 2 holds. The average price target comes in at over $35 per share, which would imply an upside potential of 30% from current prices. Looking down below at our most recent ratings, on the low end we do have our hold here with a slight upside of over 2%, and a couple high-end ratings here. We have both 50% and 75% here from Oppenheimer. For our second strong buy stock today, we're taking a look at EverQuote. They trade under the ticker EVER, currently priced at $18.44. The stock has climbed 39% over the past year, but that includes growth of 168% in the last 6 months and 41% in the last 3. Evergreen is an online insurance marketplace. They operate a platform that connects insurance buyers to insurance agents, covering multiple aspects of the industry. That includes life insurance, car and vehicle insurance, and home and renter's insurance. Agents can post policies and pricing on the platform in a format that is searchable for potential buyers, and buyers can then use the search capability to seek out specific insurance products and specific policy pricing ranges. EverQuote provides these services free of charge to the policy buyers and takes its own cut after policies are purchased through fees paid by the issuing insurance company. The company describes its mission as empowering insurance shoppers and uses the combination of digital tech and data to make the insurance market simpler and more affordable. EverQuote did come out with their fourth quarter and full year results on February 25th, and they did post a much narrower than expected loss per share. For their Q4, they reported revenue of $55.7 million, exceeding expectations by nearly $6 million, and a loss per share of 19 cents, much narrower than the 32 cents anticipated. For the full year, revenue came in at $287.9 million, and they said that 2023 was a transformative year for the company. One analyst from Needham upgraded their price target on the stock following the latest report. They noted the company's Q4 results surpassed expectations and that they've been able to capitalize on the favorable advertising climate while also maintaining effective cost management strategies. Despite the lack of full-year guidance, the first quarter outlook is promising and suggests a continuous recovery trajectory bolstered by insurance carriers ramping up their marketing efforts and increasing budgets to attract new customers. With 7 current analyst ratings, EverQuote is rated a strong buy based on 6 buys and 1 hold. And the average price target of $24.33 would imply an upside potential of nearly 32% from current prices. Looking down below, we actually have a lot of price targets all coming in at that 35% upside point. On the low end, we have a buy rating from Raymond James with an upside of 8% and a high-end price target from Craig-Hallum with an upside of 41%. So that is a quick look at 2 stocks that come in with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own due diligence and research. Once again, I apologize for the extra nasally sound today. I'm going to try to edit out any sniffs. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.